Wall Street's biggest banks about to kick off their second quarter earnings season. JP Morgan Chase, Citigroup, and Wells Fargo slated to report second quarter numbers before the bell. JP Morgan and Citi both expected to post sharply higher earnings per share compared to a year ago. Joining us right now is global economics editor with the Wall Street Journal, John Hilsenrath. John, good to see you.
Hey, Maria, great to be here.
So the other day you were here, and I think Kevin Kelly was with us as well, and he said he's with us today. He said that JP Morgan is expected to report earnings up 30%. That's what you said,
correct,
didn't you?
yeah.
What are you expecting, John?
Well, you know, what's really striking is that the earnings picture is really good right now. Like you said, 30% for JP Morgan, but bank stocks have been doing really poorly. You know, Citi and Wells are down more than 5% so far this year. JP Morgan a little bit less than that. They're trailing the broader market. One of the things going on right now is that banks tend to be hurt. Their profit margins are being squeezed because short-term interest rates are going up more than long-term interest rates, which means their cost of funds are going up faster than what they make on their loans. And I think investors are latching on to that.
Gary B. Smith, what do you say? These stocks have not kept up with the earnings.
Yeah, I'd say it's time to buy, to be quite honest with you. I think in almost every, and you know, I think Kevin had probably seen this trend too, in almost every economic boom, and you can confirm or deny this, John, the bank stocks eventually kick in. If they're lagging the market right now and you expect GDP to keep picking up and the economy to keep picking up, you got to buy these stocks.
Yeah, I think so. John, my question to you is we've seen JP Morgan's down about 1% on the year. We're going to get PNC coming up. Regional banks should be doing exceptionally well, especially with some of the rollback of regulations they have to face. Right. You're starting to see the economy is actually doing exceptionally well. You were referencing sort of the net interest margin here. What is going to be the implication for the second half of the year for the banks to actually do well in this market? You know, we've seen them down on the year, but it seems to be a rate story. What can be the catalyst for them going forward?
Well, I mean, I think it has to be loan growth. It has to be, you know, does the economy keep up its pace of growth? We're going to get something like 4% in the second quarter, and can the economy keep it up? You know, the banks have a lot going for them right now. The tax cuts really benefited them. As you mentioned, the regulatory rollback is helping them, but the profit margins are being squeezed a little bit, and the deciding factor here is loan growth. And that's where, you know, I'm looking today to what Jamie Dimon has to say. You know, in my mind, JP Morgan and Jamie Dimon are the bellwethers of Wall Street right now. Goldman Sachs was the bellwether in the 2000s. JP Morgan is really the kind of the top bank on Wall Street, and I want to hear what he has to say about the outlook for loan growth.
Yeah, I agree.
Just one last thing to Gary B's point is that the banks actually should do well over the next month because they're going to be doing buybacks. They're past the stress test, so they can actually start redeploying their capital into their own businesses as well as purchasing stock. So I think that the banks are set up for success right here.
And didn't the Feds just give Morgan Stanley and Goldman Sachs a break in terms of what they can pay back and how much capital they need to hold just last week?
Yeah, they did.
All right, we'll leave it there. John, good to see you, sir. Thanks so much.
Great to be here. Thanks a lot.
John Hilsenrath.